Boom, we are live, ladies and gentlemen. Pretty excited about that. Haven't done a live stream in a while. Hopefully it's going to go smoothly. There's a few things I want to go over today. First off, the global GDP to debt ratio I think is very important. Stellar, Lumens, and Fetch, two of our private bear den trades, are both over 50%, one almost at 100% on Fetch there, and XLM looking like it's about to break out. I want to take a quick look at Bitcoin, and at the end of the stream, save all your questions, your comments, and if you even come late, leave them down below, and we'll do our best to take a look at those either this stream or the next stream. So whatever tokens you guys are interested in, at the end of the show, I'm going to take a look at everything you guys are looking at. That way we can get as well-rounded view, and I can actually get you guys to help me look for some of the things that we have been looking for. So I'm very excited about that. Right out the gate, smash that thumbs up and we'll dive in. So this came out on NASDAQ today. It says global debt hits a record high of 331% of the GDP in Q1. Now, I'm going to read from this for a second, but I want to highlight something specifically. It says, this represents the bank's financial institutions said the first quarter the GDP ratio jumped over 10%. Now, what's interesting here is that means we've actually been operating at a significantly higher debt to GDP ratio for quite some time. We've actually been operating somewhere around, like, for every $2.74 we create in debt, we create around 80 cents in productivity. Part of the problem here is a relationship of something that we often overlook, is that right now we've got a world that builds toys for, or like tools for inspectors to inspect inspectors, inspections about inspecting other inspectors. And we have a big loss in terms of the way our economy is built. One of the things I'm kind of excited about this pandemic for, it's really going to gut and make the economy lean again. Now, the problem is that they've just been printing an enormous amount. So it says overall, the gross debt issuance hit an eye-watering record of 12.5 trillion in the second quarter around the world, compared with the quarterly average of 5.5 trillion in 2019. And also noted that 60% of the issuances came from governments. This is important, again, to remember that around the world, all these different governments are taking out these loans. Here I am in Costa Rica. They did the same thing to help cover medical bills, to give aid to individuals. Again, now the important part here is the group said some $3.7 trillion of emerging market debt would come through into the end of 2020. It was set to raise to $4 trillion in 2021. This means what we're going to be looking at here is a long-term game of printing. And for any of you that have been following us for quite some time, you know that I'm actually kind of in a self-inflicted argument where the nature of deflationary technology in my mind will at one day outpace our ability to print money. Currency is designed to be moved. So are we going to start to see helicopter money, universal basic income? Are they just going to start giving money away? As a matter of fact, I think brands are going to be the first to figure this out, that universal basic income should come from the companies that are worth so much, and it looks good on them. So I'm really excited to kind of see the future of that. The second little bit of news is going to take us into our charts here. Stellar, Lumens becomes a part of the Samsung blockchain Keystore. Now, for those of you that know, we've been following Stellar here from our initial price targets and entries. In the private bear group, we made this XLM call on maybe just a week or two ago, and we've seen, boom, our first target range hit and off to the second. Now, again, for those of you that, again, are part of our private group, if you're not, you can join our private newsletter in our community and join those in the links below. We also have a free newsletter, which we send out every now and then, that kind of highlights some of this stuff much after the fact. Fetch is another one of those ones that's in our rocket fire list right now. So we actually have about 10 of these that we've found that look like they're going to each produce somewhere between 100 to 500% gains. So that's huge to be able to find these things so frequently and so consistently and be able to play them kind of one right after the other. So let's take a look at XLM, but first off, let's dive into Bitcoin. I want to make sure we go over kind of the general market sentiment. So Bitcoin is our North Star, our guiding light. It effectively, in my mind, acts as our US dollar in the crypto space. That's important to remember that instead of charting against US dollars here, what I want to do is chart against Bitcoin because I believe that it has become the fundamental underlying currency. Now, and money more specifically, the store of that wealth and of that energy. So here we can see on the daily Bitcoin, this has been drawing this big pennant for quite some time. And it actually looks like we may have been creating this broadening descending wedge, which would put us to a breakout somewhere around 1150 potentially. Now, the downside was the distribution model that we've been looking at. So remember that in technical analysis, what you're doing is you're increasing the probability of the trade that you want and getting it right. And you can get it right by making sure you cut losses, right? That way, if you got it wrong, your trade doesn't annihilate you. This is a very, very important thing to understand if you're trading. Now, if you're investing, the value investor should just go about their merry old day and buy as frequently as they possibly can and just basically enter whenever appeases their regular modality and go with that. But on the daily here, I'm looking at Bitcoin and we are at this blue line here, which means we're both below the 21, the 9, and the 50-day moving average. This is big. Now, we had been short in Bitcoin since the 10th here, since we started phase D, which is around 9,600, and I've been holding short pretty much since then. I did take a few re-entries around 90.90, and I'm still not convinced. We are pretty much right in the midway point of this particular trend line, and because of that, it makes me think that I'm going to stay very cautious around here. We could come flip back up and close above the 50 moving average, and this might become a bullish trend. But with all the momentum we've been seeing in the altcoin space, I actually believe that we're going to see a retracement, and we might actually see that larger pennant that we are just looking at here on this daily chart come to fruition, which means that we might drop all the way down to 6,500. This is important to recognize, is that instead of going into USDC, if you're a smart bear, you know that there are other positive black swans out there, and then that brings us to XLM and Fetch. So let's take a look at Fetch first. This trade's done phenomenally well for us already. We're up in the 100% range, and I think we're going to continue further. Now, one of the things I want to highlight here is the importance of the private group and the community. From our initial entries, you can see down here, we still have our original drawing up on the board. Was around 270 Satoshis, and we've gone up 20% in less than 30 days. This is huge, huge moves, and this is just the start. And we've mapped out a bunch of these already. They're going to be coming your way. So again, join the private bear group. You guys are going to make an enormous amount of money. We're going to make an enormous amount of money over the next 5 years here. So strap up. Do the best you can to educate yourself. Give yourself the tools and the equipment and mental ferocity that you need. Now, one of the fun things I like about this is the big whales have done the work for me. I don't need to look at fundamentals because the technicals tell me the story. The technicals are telling me what the big whales are investing in, and I can just follow them like a little sweet dolphin. I can jump in when I see them playing in the waves, and I can play in the waves that they're playing in, and they leave big wakes, and they're noticeable if you start looking for those wakes. So Fetch is one of the ones that fit into this Wyckoff accumulation phase. For those, again, in the private Bear Den member, the Wyckoff accumulation PDF will be coming out hopefully on Monday, just finishing up final touches, making stuff look pretty. But this is one of the most productive trading angles I've ever taken, and it almost feels like I had an epiphany where I'm like, oh, I figured out how to trade. Like, the averages now are really high of getting things right. And it was almost like that last little keystone, right? You're like trying to build an archway. It's like, it looks like it's going to collapse in, and you put the keystone in, and just this archway builds such a solid force and such a stable place to trade from. And I believe the Wyckoff methodology here was that, like, mixed with everything else that we use, the Fibonacci. But really what you want to do is break it down to some very, very simple things. So on the daily, we saw, again, Fetch break above the 50. And then if I actually turn the bear claw on, so these are all free indicators that you can get by following us on TradingView. But anyways, as we can see this breakout here, we closed above actually, I'll turn it off here for a second. I'll make it look a little cleaner to explain my point. We closed above the 50, and then the 21 crossed over the 50 and started moving up. We retested that 9 and the 50-day moving average, and we've been on an explosive run since then. I believe Fetch is going to go much higher, but again, we'll leave kind of the final sentiments for what this looks like and how it plays out, where the entries and exits are, because there are a few of these trades like Digibyte where we already did 300%, and we're looking at the final potential exits or a whole new bull run. Now, we'll go over that in some of our next shows. I do want to, again, take a look at Fetch. Again, for everyone out there, compare these models and make a clear indication so that you guys can teach yourselves how to do this as well, and that's the most important part. Look for these phases, just like we did with XLM, right? here we go. We saw XLM, we saw it break out into phase E. We closed above, and the 21 and crossed over the 50-day moving average for the third time here. That was actually a frequent retest we had, but on that third retest, when it crossed over, it gave us a nice bullish signal. Right, so let's look at BAT. This is one of the next ones up on the trade range. So this is kind of a freebie for all of you guys. I want all of you to make as much money as humanly possible. So please learn how to use this in line with all of the other trading indicators, like the falling wedges, the double bottoms, etc. So again, I'll show you how this kind of works out, like what it looks like. So here we were as an accumulation period. Right, and here we saw, you've got your double bottoms, your inverse head and shoulders, your descending wedge, your ascending channel, and again, your double bottoms. So if we scroll back over here, we're like, oh, okay, look, basic attention token made that double bottom. We had that spike down in C into the bottom parts of our box range, and we're closing. Look, the 21 crossed over the 50. BAT here is going to do likely the same thing that Fetch and XLM did. So, ladies and gentlemen, there are so many good trades here, and I can play in the waves that the whales are playing in and pretty much ignore everything else, because we are in a much more advanced ecosystem now than we were in 2017. This makes being a fundamentals investor and trader, and what I like to call an adventure capitalist, wildly exciting. We have to envision that over the next 10, 15, 20 years, the blockchain sector and fintech in general is going to eat everything, securitized tokens for everything. It's a huge industry, and we are just seeing the tip of this iceberg. It's one of the most exciting things. Like, I had that moment again, like, where I remembered why I was so excited about this in 2017, and it's not because of the money. That's super cool, but it's really exciting to imagine what the future looks like as we break into these areas of massive deflation, and we look and we ponder technology that's going to so massively outpace our ability to even understand it. I remember when I was young and we had, I thought ham radio was cool, and now we have cell phones and drones that I can fly out at 70 kilometers an hour, with heat thermal imaging and crap. It's crazy. But that's the exciting part. The technology, and not just them as singles, right? Not just like, oh, there was the light bulb, but you need the electricity, right? You need the motor, like the electric engine. You need all of those different technical and technological breakthroughs to kind of happen. It's not just an individual breakthrough that our society makes, it's multiple. And in this time right now, we're going to see such a massive movement in the tech and medicinal sectors. Oh, dear God, hold on, because this is going to be something so exciting. Okay, so there's the end of the show. BAT, XLM, and FET are the current trades on the table, and we've got about 10 more that look like they're going to easily do 100 to 3, maybe 500%. We're just going to be able to ride these waves. It's going to be so beautiful, ladies and gentlemen. So let's drop in and take a look at some of your guys' thoughts and questions here now. Okay. So any thoughts on SHR, the sharing token? I don't actually know what the sharing token is yet. I could type that in. Sharing token is the utility for sharing. Okay, so let's look at it the same way I did before. First off, if I can't find it on TradingView, it's probably not going to work for me. Share, KuCoin, KuCoin share. I don't see a sharing token here on TradingView, so that's going to make it very difficult, because I like to chart what the big boys are playing, not like the early stage venture capitalism, because that's monkeys playing darts at the moment. Could go anyway. I'd rather play in the big boys pool. We just have better waves over here, and more consistent, at least, right? Not to say that the early stage space isn't exciting. It's just a lot harder to know that you're getting placed. So I think this is it. Share ring. Yeah, share ring is the one at SHR. So it's up 19%. Let's take a look at the entire year. Again, if I can't chart it on TradingView, it's not really that exciting for me. Here, yeah, I mean, you could see actually that it's built up some type of accumulation and then broke out here, but I wouldn't really rely on this because I'm not trading in US dollars. I'm only really concerned about Bitcoin. So what do I have to do is I have to trade and change this on Coin. Showed it to CoinGecko, by the way, the best coin market like overall market sentiment in general. I really, really love CoinGecko. Shout out to these guys. Okay, so there we are in Bitcoin. Again, we see a type of accumulation period and a kind of a final spring and a breakout. Again, I'm really hesitant to chart something like this just because of it's not like, where is it traded? If I can't find it on TradingView, it's a very illiquid market. And if you're in a liquid market, even if it goes up 1,000%, you might not be able to take those profits. So all in all, it's hard for me to say not a trade I would be interested in when there's so many lining up right now that are just going to really explode. So again, take a look at BAT here, right? And let's use BAT and XLM again for more examples. If I actually zoom out even further with XLM and Fetch too, you could see that XLM could just be starting a huge move. So let's compare it to one of the ones that's already been on fire, that's already gone through our accumulation phase. So before Cardano broke up, one of the mistakes we made was not to chart the Wyckoff phase because, oh look, lo and behold, we would have seen that this big move was coming. But what happens next? That's the really interesting part, right? Okay, so here we go. Let's say from the top of the breakout, we have 138%. That's great. That's a huge win, right? Okay, well, same with DigiByte. Here with DigiByte, we saw this multi-month accumulation pattern come in. Here it was at the bottom, right? We had this really sharp down spike. That was like a lot of people did not want to sell there. And you saw 170% gain. Well, what happens next? Okay, well, look at XVG, right? XVG had that same type of breakout outside of its range. It went up about 100% and then started to retrace. Okay, well, what about VET? Okay, well, VET's still stacked up there after its breakout. What about Zilliqa? Okay, Zilliqa too. We see that exact same accumulation pattern down at the bottom here, bing, bang, and then this explosion somewhere between 100 to 300%, I bet. Yep, 200%. And then we start a retracement. Now, I think Zilliqa is just a little bit behind DigiByte, which means DigiByte had that nice 300% run. It's been creating another box range. It's actually potentially in another distribution or accumulation model here, but it hasn't given me enough data to know yet. Same with Zilliqa. Here we see this identical from DigiByte to Zilliqa, that 30 to 40% drop from the top of that last peak to start the new box range. Anyways, very, very exciting. That's the stuff I'm mostly interested in. I don't care what token name it is anymore. I don't care what fundamentals are behind it. If I see an accumulation range like this, I can rely on the fact there are big whales that are interested in this space, and these are the wakes that they make. Yeah, very, very exciting. Okay, so let's take a look at a few more of your guys' questions, and we'll go with that. Thoughts on Litecoin, very low price. Litecoin looks like it's just starting an accumulation pattern, so that's going to take some time, but not too bad. OXT, I'm not sure what OXT is, and then any recommendation for distributing portfolio. I don't know how everyone's different in terms of that question, like how do you hedge your bets or something like that? How do you diversify? Diversification is there for when you don't know what you're doing as a trader, but it makes great for as an investor because let's say I get 5 right out of 10. 5 of those 10 fail, 5 of them are successful. 5 of those happen to like 3x, right? Whereas the other, so I'm like, I got 1,000 in each and 5 of them go up 3x. I got 15 times my money and I lost 5,000 on the 5 that didn't work, right? So it's kind of a diversification is a numbers game. Like we are dealing with a lot of luck in the early days. And that's what I'm trying to remove here by looking at these very specific accumulation charts. Like let's remove luck and let's trade like gangsters. Anyways, I'm going to leave it at that. This is Teal with the Arcane Bear. Smash that thumbs up button. I'm very good to be able to do a live show. Hopefully it went smoothly. Let me know that this went smoothly. Maybe I'll do live shows every Sunday. I know it's not Sunday, but I just wanted to try it out, see if it worked. We are going to be join the private group, join the free newsletter, like, dislike, whatever you want to do. I don't care. Do your own thing. I love you guys. Thank you for all the support, and we'll see you again on the other side.